Hello, everybody. I'm super happy to be here with Laura Smith, who is an advanced professional. Help me, I already forgot, Laura.
An advanced certified pro advisor with Intuit.
Thank you. Yes, so she is a local agent that has had lots of experience. She's one of the only people at that level of experience around, so that's really cool. And Laura, I am so happy that you joined us today. And I'm excited to get some questions answered because for years now, we've always been questioning and Googling and trying to figure out what exactly we need to do when it comes to taxes and what's important to keep and what's not important. How long do we keep the things and what happens if we get audited? So yeah, we're happy to have you. I'm going to get right to it because your time is valuable, as is everybody's. So I just want to start, I guess, just asking you the questions that we had in order that I received them. And the first question that we had was, what can you deduct? Business stuff. What types of things can you deduct?
So the short answer is anything business related.
Okay.
The long answer is there's probably going to be a lot of gray area. Because they'll say, okay, well, I got my cell phone bill, but my whole family's on my cell phone bill. Well, your portion of it's deductible, not the whole family's, unless the family's involved in the business. So anything that you spend money on that is for your business, subscriptions, networking, travel costs, telephone costs, office supplies, if it's for the business, specifically for the business, then it is a business deductible expense.
Okay. I remember once, I don't know if this is still pertinent, but there was, somebody had told me, I don't even know if it was accurate, but if you are going to claim your cell, you need to have your outgoing voicemail mention your business. Is that accurate?
I have never heard that before.
Okay. That was a long time
so.
ago. Okay.
I don't think so. So the other caveat to that is anything that you do not get reimbursed for by another employer or another company. So for example, if I work for you as a subcontractor, but you give me $25 every month towards my cell phone bill because I use my cell phone to help your business, and let's just say my cell phone bill is $40 a month, then I can only deduct the difference, the $15 a month. Okay. Because you're deducting the $25 a month of my $40. Now, only one person gets to deduct it.
Okay, so the person that's contracting the worker would deduct that.
If they are giving them a telephone reimbursement, then yes. So they're giving the contractor $25 a month for their cell phone bill. So they're taking that $25 a month deduction off of their books. Therefore, you cannot duplicate that same $25. You can only deduct the difference. Okay, that's good to know. I was going to say, how would they know? But if somebody's claiming it, that's how they know. If there was an audit and they followed the trail.
Yeah, okay. And we were always nervous. We're like, I don't know if I'm doing this exactly right. And so it's a little nerve-wracking. So good. Okay, so you can deduct anything business related. Anything. Okay.
Anything.
And so when you're traveling and when you're eating out, do you have to save your receipts, or can you use like an invoice from your credit card statement to verify that that's what you spent it on?
So meals can be a little tricky because you are not allowed to deduct alcohol. Okay. So the IRS likes to see receipts for meals to ensure that it's not including any alcoholic beverages.
Okay.
But the IRS also says that you don't have to keep receipts that are less than $75 when it comes to travel expenses, except hotel bills. Again, they're looking to see, I believe, for those hotel bills, those lodging bills, if there's other things included on them, like the mini bar or meals from the hotel that include alcohol. There are many, many sources of capturing receipts today. Mm-hmm. If you do use QuickBooks online, you can download the app on your phone, and there's a receipt capture part of that, and you could just snap a picture of any receipt. There's lots and lots of ways to do it. And today, everybody walks around with a camera in their pocket, right? Yeah. So you could always just snap a picture of any receipt and put it into an online folder and throw away the paper and just keep the electronic copies. With the software, it kind of makes it really nice because there's also softwares called Receipt Bank The softwares that are made to capture receipts make it very easy because it pulls the information out of the receipt for you. So for example, with QuickBooks Online, if you use the receipt capture option, so let's just say you went to Bojangles and spent $5.76. You snapped a picture of your receipt, you threw it in the trash. When that $5.76 comes through your bank feed, it's going to match to that receipt because it's going to recognize that you spent $5.76 at Bojangles on X date. And then you can choose to put it to meals and entertainment, put it to travel meals, or however you're capturing that information in your QuickBooks, but it pulls all of the information off the receipt for you. So it saves on redundancy. It's a really nice feature.
Wow, that is a fantastic feature. I didn't realize that existed. Like I've thought about taking photos of my receipts, and I have, and then they just get jumbled into my photo stream because I never knew there was a place to contain them. That's really neat. I like that.
And it makes it easy, especially when you use a tool like QuickBooks, because you're categorizing everything as it happens throughout the year. So when it comes to tax time, you've got everything in a nice, neat little package, and boom, it goes off to get filed for whatever form of preparation you use for tax return. You're not sitting there at the end of the year with a shoebox full of stuff, or, you know, a spreadsheet or calculator calculating everything out. And okay, these are all food, these are all this, these are all that. It's all done for you.
That is so handy. So this was a conversation I had with one of our teammates, Jen Burkhart, the other day. We were like, okay, so there's these apps and there's these things, but then I forget to use them. Like I get it, I try it, and then I forget to use it. Does QuickBooks kind of help you? Like, does it send notifications to help remind you to use things?
Doesn't send notifications, however, because you connect QuickBooks to your bank account. And I would suggest for everybody, and I know sometimes it's hard, but I would suggest to maybe have two different bank accounts, one that's related to the business and one that's a personal. And they could be in the same bank and you could transfer between them.
Yeah.
And you can do your personal account if you would like, but it connects into QuickBooks and it gives you an option to sort through all the transactions that are happening in that bank account throughout the year. So if you had those receipts, you know, sitting in that box inside or in your pocket or in your jacket pocket from last week or wherever you stuck it when you got it, I've seen it all. One of my very first clients I ever worked on years and years and years ago, and why I stayed in this business, I don't know, brought, you know, those big giant black trash bags that you use for like leaves and stuff outside, 3 of those. 3. Hadn't filed taxes in years, 3 of those filled with receipts and paper that I had to sort through.
That you had to go through.
Yeah. So hopefully nobody's at that point and you just have your nice, neat little envelope or shoebox. But, you know, so let's just say you sit down, you get your bank statement, and you're like, oh, I got to go over that stuff. You could pull the receipts out from wherever, snap them right there, and then attach them in QuickBooks and throw them in the trash. You never have to worry about keeping them because they're already attached. So anytime you open up that transaction in QuickBooks, there's a PDF, an attachment of that receipt there.
Oh my. Yeah, that's something. I like that. I like that it's linked like that. So earlier you and I were talking about using QuickBooks. If we use QuickBooks, we could get a discount through you if we did it through the firm. How does that work? How much are we looking at? Like, how beneficial is it? That type of stuff.
Well, I'm a fan of organization. Otherwise, I wouldn't be in the field I'm in. And so I've spoken with some people that kind of throughout the years, you know, would bring their box of stuff. And I would finally convince some of them this past year to get into QuickBooks and bite the bullet and pay the $30 a month or whatever it was going to be for whatever version they were on. And not one of them was sorry that they paid that money. They were all super excited and happy. It's a deductible expense also, because it's a business related expense. It's a software you're using to run your business. They were all super happy because when tax time came, everything was done. They weren't sitting there for 6, 8, 10 hours calculating everything, adding it all up, going back and forth with the CPA, or paying their tax preparer, you know, $800 or $900 for a return. Because part of the reason sometimes a return is highly priced is you're paying for them to do your bookkeeping. So when you bring them that envelope or that shoebox full of all the receipts or all the paperwork, they have to have somebody in their firm basically do the bookkeeping for the year on that stuff before they can prepare a return for you. So you're paying for their time or somebody in their firm to do the books that you could be doing yourself all year long, just paying for the software.
Mm-hmm. Okay. All right. That's good to know. And speaking of, and this is a poster I just had, I don't think I sent it to you. One thing I noticed was I thought I spent a lot last year on businesses. Like in my head I did, and then I was getting it all ready. And I mean, I went on a lot of trips and everything, and I spent a lot of money. But when I was getting ready to complete it, it said the standard deduction of $22,000 is more than the itemized deduction. We suggest doing the standard deduction. And it was only like a $700 difference. But so would that mean I wouldn't have to keep track of all of my itemized things if I'm just going to take the standard deduction?
Two separate things. What we're talking about is going to be business related, and it's in a separate part of the tax return. So standard deduction is for your personal deductions.
Okay.
So these are not personal deductions. These are business related deductions. And you would put that in its own area in the tax return.
I wonder if I messed that up. Probably.
So basically it becomes its own P&L and balance sheet within the Schedule C of your tax return.
Okay.
So if you did not produce a Schedule C, then yeah, you probably.
I did do a Schedule C, yeah, but it still came up, and that came up before, and it was messed up. And when I did it with H&R Block, and then I did it TurboTax, my federal was so much lower with TurboTax than it was H&R. And I was like, why? What am I doing? I should just hire somebody. But then I called you literally the day after I filed. I'm like, oh, we'll find out.
Yeah, so it basically you're getting that business information entered into the business area as if it's a business. Let me ask you this: which version of TurboTax do you have? Home and business?
This was the first time I ever used it. Must be. I know there was. I upgraded to the more expensive plan.
Without taking a look at it, it's hard to say, but one should not have anything to do with the other, because one is business related, and the bottom line of the difference between the income and the deductions becomes income to you, whether it's plus or minus, because you could be at a loss. Mm-hmm. But that then moves to the income section for your personal income. Okay. Okay. So your business deduction shouldn't have anything to do with your standard deduction.
Well, that's unfortunate. Well, maybe it was just my personal deductions, and it was just coming up, and I was confused.
Maybe.
I don't know. Okay, but good to know. So next year I'll probably just hire you, so I don't have to mess with this, because it was good.
If you had a Schedule C, you might be okay, but we can take a look at it afterwards, and we can see.
I definitely did a Schedule C, and I entered all kinds of information, my office size and all of that, but yeah, it was still different. Okay, next question. Should I be paying estimated quarterly taxes? How do I know when I should?
So generally, you will get vouchers with a tax return whenever it's produced. If the state, and it's more the state than the federal, but both of them produce it, but the state's the one that really looks for that. That when you do a tax return, if you owed a large amount of money, generally it will produce vouchers telling you, here, this is what we suggest that you pay quarterly over the next year to avoid having the same amount owed at tax time the following year. Okay. If you do get those vouchers, if the tax software produces those, it is suggested that you go ahead and file that. You can get a penalty on your following year's tax return if you did not do that it wasn't paid timely, because especially the state, they're not going to wait for their money. They want their money early. They don't want to wait for you to give it to them. However, it's not commonly done, and it's not a huge deal. Even if you're first year in business and you're getting a 1099, and you know, hey, I'm going to have to pay, it's a good idea to set that money aside and pay it quarterly anyway, so that you're not sitting there, at April or May paying out 10 grand or 15 grand, which some people do, because depending on how much money they're making and what their deductions are. If you get a 1099 for $50,000 and you only had $10,000 in deductions, you're paying taxes on $40,000. That's a lot of money.
Well, I think that's where that's what I was wondering. Like okay, I got the vouchers last year. That was the first time I ever got vouchers. And I was like, oh, that's really nice of them to set me up. I'll just put it in my savings account and I'll pay it next year. And then I did my taxes and I owed $13,000 federal or something ridiculous. And I was like, it's all right. I put some in savings. I'll just use that. And then when I was finishing my taxes, it was like, oh, you have a prepayment penalty. And I'm like, wait, why?
You got a penalty for not paying the quarterlies.
Yes. So
it's not a lot, and it's not a lot, and it's not a huge deal. They're not going to come knocking on your door, but they do hit you.
It was like
they do give you one of these, like pay us our money.
So how do we know, like, is there a number when we're making indirect sales that we should know, okay, I need to start paying in quarterly? There's not.
No.
Okay.
No.
Okay. Well, typically direct sellers aren't making that much their first year anyway. So hopefully they'll just know. And really it was less than $200. So it wasn't like compared to the 13,000.
Right. Right. Yeah. Like I said, it's not a huge deal and it's not a big penalty, but if it's avoid, if you have the funds and you have the organization to do it, I would say go ahead and do it.
Okay. And so with the vouchers, would I set that up automatically, or can I go onto the IRS website and pay quarterly?
You can go on to both the EFTPS website. You would set up, not on the IRS website, but you would set up an EFTPS account. That's how you make payments to the IRS.
Okay.
And then the Department of Revenue, the NCDOR, also has a way to make those payments online.
Okay.
You can mail them in with the vouchers, or you could do them online. I'm a fan of doing it online.
Me too. I won't mail it. I'll forget to get stamps. Like, I know me. I won't.
Yeah. And I don't recall if the EFTPS allows you to, but I know the Department of Revenue allows you to pay with a credit card as long as you pay a fee.
Yes.
So you don't have to do a check. You can do it with a credit card, but you just have to pay the processing fee.
Yeah. Okay. All right. So there was a question. I get confused on when I buy something and give it away. What value do I use to deduct?
Okay. So I had a question about that. So, where was that? I have my notes here. All right. So I need a little bit more clarification on that, because it really makes a difference. Did you buy it with the intention to give it away? Is it an asset that you used for a period of time and then gave away? So I need to understand what the product is, what the purpose it was for purchasing it, what it was used for, and then when it was given away to give that answer.
Okay. I'm going to assume, because this was with my company, I'm going to assume somebody bought, let's say, a brush set for $50. But as a consultant, they bought the brush set to give to a hostess. So, okay, I'm going to purchase this brush set with intentions on giving it to my hostess that has the most sales this month. If the cost of the brush set is $50 and we get 25% discount / commission because we work for the company, would we say we spent $50 on this, or would we discount our commission?
So what did you pay to buy it? Did you pay $50, or did you pay $50 minus a discount?
Discount minus discount.
And whatever it is that you paid the discount.
Okay. And
so if it was $40 with the discount, then $40 is the cost of that item to you, because that's what's going to hit your bank account. Okay.
Well, it doesn't always do that though, because like if I that's only if we place it as a consultant order. If we place it as a customer order, then we get that 25% back in our commission check, but on our bank account, it looks like we paid $50 instead of $40. I'm obviously fudging the numbers a little bit, but.
So at the end of the day, it's going to be the net effect is going to be the same, right? Because if you paid $50 for it, but then you got a commission back later on, it's going to increase your revenue. So you're still you're going to have a net effect of $40. Because whether or not they just charge you the 40 flat out, or you paid 50 and got 10 back, you still are $40 net at the bottom of the day, right?
Right. Okay. So since we got paid on it, then when we're saying that was an expense, we did pay 50 at that time, and then we got it back. Okay.
So it's going to be the same net effect. So whatever you paid for that item at that given time is what the deduction would be.
Okay. All right. And you were saying something, it depends how it was purchased. Does that mean like if I just buy a bunch of product to keep on hand and people can come to my house and buy it, is that different?
That is inventory then.
That goes separately.
That is not a deductible expense at the time that it's purchased. your cash would leave your account. So let's just say you spent $1,000 on products. So I'll use brush sets since you use that example.
Yeah.
So you buy 10 brush sets at $100 a piece. So now you've got the 10 brush sets sitting there. You spent $1,000, leaves your account. So your cash reduces by 1,000 and inventory increases by 1,000. Okay. Then each time you sell one of those brush sets, you deduct the $100. It moves from inventory to cost of goods sold on your profit and loss type area, and it becomes a deductible expense, but only at the time that you sell it.
Okay. Understand. Yeah, I actually remember seeing that when I was going through the taxes. TurboTax was okay. It was okay.
Yeah, it's pretty good.
H&R was not. It was. I was like, I feel like I didn't enter anything. This is not good. All right, cool. So you've answered that. Can I deduct postage I pay for shipping orders to me? Like if we order from our company and it's $6.95 shipping, can we deduct that?
Is it that you're buying it for yourself, or you're buying it to give to your customers, or you're buying it to use it as a sample?
If we were buying it to use as samples or to give to our customers, not for personal use.
Then it's a deductible expense.
I did not know that. That's cool. Okay. But never for a personal order.
Like if you were just ordering your own set of brushes for your own use, then no, then you're buying a product from your own business.
What if I place an order for stuff for myself and for my customers in one?
Then I would deduct it then, because it's one big postage.
Yep, that's what I typically do.
And it probably doesn't even affect the cost of the postage. It's probably all close to the same when you do that. So
yeah, we have a cap.
Yeah.
Okay. Do I claim all income or just what's on my 1099?
I would say all. And so that's going to be a little bit gray area also. And so from the perspective of, let's just say as an example, I am, I don't know, I'm a janitor.
Yeah.
And I have 3 different buildings that I go to and I do janitorial services. They each give me a 1099 because I make $10,000 a year with each one of them.
Okay.
But then I also have a couple of places that I only went once or twice throughout the year and I made less than $600. Mm-hmm. Well, they're not required to give me a 1099 because it's less than $600. However, I could have went to 50 different places for less than $600 each a year. That's a lot of income that I wouldn't recognize then. So technically you should claim all income that happened, especially if it hits the bank account in which you are claiming your business expenses.
Okay. See, I knew that. I've gone to the IRS site and I've seen that it says all income must be claimed.
Yes.
But then people are always like, nah, if you make under 600, you don't have to claim it. I'm like, no, it says like very clearly you do. But then I was like, but they're right. How would they know if
correct.
You don't have a 1099?
So, I mean, and it also depends on how they pay you, right? Did they pay you cash? Did they cut a check to you? Because if you came to my business and cleaned my office and I cut a check to you for $550, then yeah, I'm not giving you a 1099, but there's still a record for my business that I paid Rachel $550 to clean my office.
Right.
So if I was audited and then they saw that and they followed the bouncing ball and so, yeah, you received the check. Oh, so, hey, you never claimed this income. What's going on here? You know, is it likely? Probably not, but
that's good.
You're
to
supposed
know.
to claim.
Like following. Okay. Yeah, that's actually
because remember, anybody that pays you, at least for legitimate business, is going to be deducting. So, like, if I were to purchase a brush set to give away as a gift, as a marketing type thing, or just as a giveaway, or to an employee for something, I'm going to deduct that from my business. So I'm going to take that $100 that I paid for that brush set back to my example, and I'm going to deduct. I paid Rachel $100 for a brush set because I want to deduct that expense. It's a marketing tool for me. It's a something I'm giving away or a gift I've given to somebody.
Yeah.
So remember, the IRS is looking from the bigger picture that somebody deducted something somewhere and somebody got money for it somewhere, and they want A to equal B. You know, they don't want to find out where the difference is because they want to make sure they get their money.
Right, right. You're so clear and concise. I like it. Okay. Do I have to keep all receipts? No. Okay. Oh, there was a question. Let's say I didn't have my receipts and I didn't use any receipt software, but I have all of the purchases on my bank statement. Would that suffice if I were audited?
I mean, if it's the best you can do, I don't know what else they could, they might, right. I mean, and again, like I said, the restaurants is really, I mean, obviously if you pay it off as Depot, what did you buy it off as Depot? Most likely something for the business.
Yeah.
If you're a contractor and you've got payments to Lowe's and Home Depot, well, it makes most sense. That's where you're going to spend a lot of money, at Lowe's and Home Depot, because you're buying stuff for your jobs.
Yeah.
So it's really the ones that are questionable, like the restaurants, like those types of things. Now, if you were to host an event, and this really is more employer, not 1099 related, but if an employer was to host an event, a year-end party where they're going to give away awards for the person who did the best job, or got the employee of the year or something.
Yep.
That's considered a little bit differently than like just going out to lunch or hosting a lunch. Or if you're doing a lunch and learn, that's a little bit different than just me and you going out to lunch to network or to talk business. So it also depends on the reason for the money you spent for the food and the drinks.
Okay.
Because sometimes it's 100% deductible, and sometimes it's 50% deductible, and sometimes it's not deductible at all.
Okay. Well, I actually do hold very large events. It's like a whole spa thing at a local hotel or something. And so would I be able to and it's basically to recruit and build my team. So I go out, give them beverages, give them waters, have them do facials or whatever on their hands. There are drawings where they can win, they just enter their names for coming and they can win one of the baskets. Would I be able to claim the cost of the vendor, the cost of the food and drink?
Yes, that would be a training event or a marketing event. And I think that the bookkeeping person should be the person that they test all this stuff on, and that I volunteer to come and be the facial person. And any of those products, just let me know the next event, and I will verify that it was a technical event.
Well, you'll be there coming up this spring.
There we go. Now, talking one more thing in this same realm. Remember, each year mileage amount changes.
Okay.
IRS will send out a notification usually around November, December for the following year's mileage. So 2021 is 56 cents a mile.
Mm-hmm.
A lot of direct salespeople would have mileage deductions.
Mm-hmm.
Mileage for a direct salesperson probably is just about any place that they go for the business. So if you run to the bank, you run to the post office, you go to the store to pick up products, they run to your house to pick up products that came in shipping. They go to host an event. They drive to my house because I host a party. They drive to the hotel for the spa event. Those are all deductible miles because they are driving them for business purposes. Now, the IRS wants you to keep records of the date that you traveled, where you traveled, who you met with, and why you traveled there.
Oh, okay. I was going to ask.
So there are apps that can do all that. To me, the apps drive me nuts because every time you get in the car, you get a swipe right or left as a business or personal. And I use my calendar on my phone, and I keep a spreadsheet in Google Maps. So if I drove to your house because I was coming to look at your books together, I would just Google map your address, put your name, and say I went to review books, and that's it. Now, if you came to my office, you could deduct that mileage, but I could not because that's my office. Right. So that's my place of work. So to and from my place of work is not deductible, but any place else you would drive for business purposes would be.
Okay, that's good to know. Now, here's a question. I travel a lot. Big time travel. Like, I live in North Carolina. I go to near Canada. I go to Florida, and I always do something business related when I'm there. So like when I go up near Canada, I always do a party. Could I use that because I did do business up there?
So what I'm going to say is that you would have to use your judgment on something like that. Mm-hmm. Was the purpose of the trip to do the business? Or was the purpose of the trip for a vacation that you happen to do business at? And you would have to make a judgment call. It's your tax return. You're the person signing it, attesting to all the information in it. Okay. And so you would just basically have to feel okay with those deductions and know that if you got audited, you would have to articulate this and then have to speak with the auditor and talk them into why that was deductible.
Okay. One year it would have been easy. I had 10 parties in like 2 weeks. I went there to do parties.
that to me would be that sounds legitimate. If you went, if you booked a whole bunch of parties and, you know, booked them all in the same period of time, to me, that makes sense.
Yeah, I totally did. That's the only time I did that.
But if you were gone for 2 weeks and did one party, well, that's kind of hard to swing.
Okay, good to know. All right. Got that question. Oh, internet. Can you claim your whole internet bill? Because my whole family uses my internet, but I would never be able to do my business without it. So I don't know.
So technically your internet should really be part of your home office expense in that capacity. So home office expense would be any area of your home. And I think somebody else asked that question because they don't have a whole office, but they have a quote unquote space.
Yes.
In their home. So basically you would have to measure that space, whatever it is, whether it's a whole room, whether it's a closet, whether it's a quarter of a room. You would take the measurements of that room or that space, and then take that percentage of the whole house. So if we're talking about 100 square feet out of 1,000 square foot house, we're talking about 10%.
Okay.
And then you would take 10% of the household costs, which would include the internet.
Okay.
Gotcha. So you would deduct 10% of whatever the mortgage or rent was, the utilities, like that type of thing, and that would be your home office expense.
Does it do that for you? I feel like it does that for you. Like when I entered it, I entered the square footage of my office. I entered my Time Warner bill, or not Time Warner, we're Spectrum these days. Right. But I did all of that. Does that automatically take the percentage of my office, or would I?
It should have.
Okay, I was going to say
again without looking at the software, without looking at what you did, I can't say, but it should.
Okay, but it'll probably say as well. Okay.
Yeah, but that's how you would calculate it. So then you would just take each one of those costs that added up for the year, and then take 10% of that, and that's generally how the home office expense is calculated.
Okay, so phone bill wouldn't be a home office expense; that'd be a business expense.
Correct.
Okay, I see now. Oh,
and so if you only had the internet for the purpose of your business, like let's just say you were a single person, no kids, and you're like, I wouldn't have internet if I didn't have this business, then I would deduct the whole internet as a business expense. But if you've got, you know, kids at the house and smart TVs running, and if it's like my house where internet's, yeah, I mean, you can't. You have to kind of rope it in. So you just have to make that decision.
Just a minute. I got one kid's coming in from the pool with a mouth agape. I'm like interested.
It's too cold to swim. Not warm enough yet.
They've been swimming for 2 weeks. I'll be right with you. I'll be right with you. Go on out. And then the last, what are the benefits of having someone do my taxes for me?
I think the big benefits are just knowing the tax laws, knowing, you know, making somebody feel okay with what they deducted or didn't, you know, having that professional kind of give you the up or the down on what you can do, what you can't do. And then there are some things that you might not think of, you know, that you didn't think to expense, or that, you know, some tips or tricks, or, you know, did you buy, you know, do you put the vehicle as part of a business expense, or do you not? Do you just do the mileage? Do you know, hey, I just bought this $2,000 copier because I want to make flyers to put up, or I want to make pamphlets to give out at these things. You know, how does that look? So there's going to be maybe some higher ticket items or some higher level tax things that maybe you can start to have conversations about. You know, if you're into direct sales, you know, do you register as an LLC? Do you become an S-Corp at some point in time? Because I know back when that LuLaRoe or whatever that was called, when it got really, really big, I had some friends that made over $100,000 a year in net profit selling that stuff.
Yep.
You probably want to become an S-Corp, you know, and run some payroll if you're at that level to save yourself that self-employment tax. So sometimes those conversations are important to have.
Is that a conversation I would have with you? Because I'm at that point and I don't have a payroll. I kind of contract people as needed, but I was wondering about that. Like,
well, the payroll would really be for you, not for them.
My own payroll, even though I'm
your own payroll. So you would have to register, become an LLC, and then elect to be taxed as an S-Corp. But once you did that, then you could run a payroll for yourself. So if you're hitting about $50,000 net profit on the bottom line, being self-employed, you're paying self-employment taxes.
Yeah.
So at about $50,000 a year is where that that exchange starts to make sense, because as an S-Corp, you know, you've got to file a separate tax return. Now you're filing an 1120S in addition to your personal tax return. It no longer goes on the Schedule C. You get a separate business tax return. And then you've got to pay for a payroll subscription, which is going to run you about $50 a month. So now you've got anywhere from $1,200 to $1,500 in additional expenses every year that you did not have before, but it about washes with what you're paying in self-employment taxes. So then as you get upwards from that amount, it starts to benefit you more to run that payroll throughout the year and not have to have all that money set aside to pay those big taxes at the end of the year.
Okay. You and I need to have a conversation then. Okay.
Because now you're paying yourself payroll. So
that's
you're
why I was complaining to my husband. I'm like, self-employment sucks. Self-employment tax sucks. Like, look how much I'm getting taxed.
Yeah.
Okay. Oh.
Because the reason for that is, you know, when you get paid from an employer matches the FICA and Medicare.
Right.
So basically, when you're getting that self-employment taxes, you're paying what a company would pay for FICA and Medicare.
So we're double. Yeah.
Sort of. Oh, look at her.
Yeah, I know. Did you go swimming? Yeah. All right. I will be with you guys in 2 minutes. Okay. You can. You just have to be quiet. Okay. So I think that was it. I did want a little bit more on the QuickBook discount. That's Miss Laura. So hi, Miss Laura.
She was waving. That's why I was waving. Was she about 4, 5?
She'll be 5 in June. Yep. Good job. She knew how old you were. What? You're picking your nose. I told Sarah before.
They all do that.
Earlier I was playing with her and we were playing walkie-talkies and she's sitting there talking to me and it's like, I'm like, Addie.
My 5-year-old nephew, who'll be 6 in August, constantly. I mean, it's the age.
It's like a pacifier for babies. The last question I had was, you had mentioned the QuickBooks discount if we sign up through your firm. How do we do that if we want to do QuickBooks? Yeah,
so from being a pro advisor, I had a wholesale account. So basically, I pay into it, and then I get paid from anybody who has an account with me. So for example, and it depends on the level of account that you get that makes a difference in the cost of the software. So QuickBooks Plus, which is probably more than most people would need, but if you want to keep some sort of inventory on hand, that's probably where we have to go. Straight through Intuit, that version is $70 a month. My cost is $42 a month, so it's a pretty significant savings.
Wow.
The next level down is Essentials. And I want to say the Intuit cost on that one, and I don't do that one as much, is 30 something, maybe $40 a month, and I get it for like $30 a month. It's like a $10 a month savings on the Essentials. It's not as significant, but it's still a savings.
Okay.
I would say most people in your realm, Essentials would be just fine. But if you wanted to keep inventory on hand, we might want to look at the Plus, just because there's some bigger features. There's some cool features in there. And maybe somebody like you might want to do the Plus, but then other people could do the Essentials, because there's probably going to be some things you would want to do that when you're dealing with your team that they won't need to do if they're just, going business to person and not team to team type of things. Right. But we could look at them and we could show you the difference and talk about the pluses and minuses for sure.
Okay. So if one of my teammates wanted the Essentials, how would they get a hold of you for the discount? They just email you, or?
All they have to do is email me. We can set up a time to send them over what we need. For the most part, we would just send them an engagement letter saying that they're engaging us to purchase QuickBooks from us. They would sign a monthly payment authorization form for whatever amount it is for that version of QuickBooks. We would plug it in, and then it agrees on a date. So depending on whatever day of the month when we start the product, and then we would just invoice that bank or that credit card once a month for that price, and then they would have access to their QuickBooks.
Okay.
I will say that anybody that goes under our wholesale account, that as a firm, we have access to their books. We will not look at their books, though, unless they ask me to. Some people are like a little bit, scared about that. They're like, well, if you could see my books, I'm like, trust me, unless you're paying me to look at your books, I'm not looking at your books. I don't have time to look at anybody's books that is not paying me to look at it.
Yeah.
On the other hand, I have some people that are like, hey, did you see that transaction the other day? No, once again, you're not paying me to look at your books. I can if you'd like me to. I have the access, but we are not looking at your books if you don't ask me to. I promise you that.
But you have that. Yeah. Okay. Very good.
Now, only myself and my partner as the owners would have access, because I would have to turn it on for the other people in the firm to see it. So we wouldn't turn it on unless y'all asked us to. Because some people become a monthly client, because we do offer full monthly bookkeeping services. Mm-hmm. So if there was a client, and depending on how much interaction you have or how much detail you want to get in your books, our monthly services are cheap. I mean, comparatively, usually right around $300 a month for a company that's not doing like a lot of stuff will get you full monthly bookkeeping. So that means that we're helping you. We're getting your books done all month. Sometimes we even have some that do $250 a month, but it also depends on sales tax and how the sales tax is taken care of. So if we're not touching sales tax at all, and it's a pretty simple account, then we'll do it for $250 a month.
Wow. Yeah, that's not bad. I've looked at it online because I'm always looking for easier buttons, working smarter, not harder. Who can I have help me with these things?
Right.
And that would be really nice too.
Yeah. So with the software, it ends up being about $300 a month then. For the full bookkeeping service plus the software.
And you can write that off?
Yeah, you're paying for bookkeeping expense. Absolutely.
That's awesome. Okay. Yeah. All right. Well, remind us of the name of your firm.
Triangle Small Business Solutions. We're based here in Clayton. Our office is right up on Highway 70 next to Venero's, if anybody's familiar with that in this area.
I don't think I know Clayton.
Oh, it's a blessing and a curse, trust me. Being right next to an Italian restaurant. But since COVID, we haven't been in the office that much. I do have somebody that's in the office on Mondays to meet with people or to receive things, but generally we're all working from home these days since COVID. So we will schedule if somebody wants to meet in the office to meet there, and we follow all safety protocols, wear a mask, we've got the sanitizer and all that. But for the most part, today's world, you don't even have to meet in person. You can do everything virtually. Yeah. We can meet via Zoom. We can have a shared OneDrive folder that everything is secured. So it makes it very easy.
Yeah. I love the virtual world. I mean, I love seeing people too, but virtual is awesome because I don't have to take time to travel. I can be wearing no pants right now and nobody even knows.
Well, okay, be careful with that, because there are some things, if you look up on YouTube, like there are some horror stories where people have done stuff like that or done really weird things and didn't realize that they didn't stop their Zoom meeting.
Oh, awful. Now I'm going to go to YouTube. I'm not going to be productive the rest of the day, Laura.
It's like that viral picture that went around of some lady that lost a bunch of weight and stood on the scale. Have you seen that?
I haven't.
She was on the scale with no pants on, and it was a reflective surface scale. And she took a picture to show the number, but she had no pants on. And she posted it on social media.
That's good to know. When I weigh myself, I'm always naked, and mine is glass.
Yeah, don't take a picture.
Don't take a picture. Oh, that's good. Well, thank you so much. I will be in contact soon after I hit up YouTube and watch some videos. And you and I have to talk about this QuickBooks because I've got to get some things done or I'm just going to lose my mind. So
absolutely. Yeah, just hit me up. And if anybody else wants to touch base with me, please share my email address with them and we can go ahead and we can schedule something, have a conversation, whatever they need.
Awesome. Thank you so much, Laura.
All right. Have a great day.
You too. Bye-bye.
All right. Bye-bye.